As mentioned, global stocks are headed for their best week since November last year after encouraging U.S. economic data soothed fears of an imminent recession and a rapid shift from a rout last week that kept investors wary of a bumpy ride ahead. Japan stocks led gains in Asia to notch their best week in 4 years, with the Nikkei jumping 3.6% to cross 38,000 for the first time since August 1st. Lifting sentiment, U.S. retail sales increased 1% in July, far surpassing the Dow Jones estimate of a 0.3% uptick. Weekly jobless claims also fell for the week. Markets expect the U.S. Federal Reserve to lower borrowing costs from a 23-year high next month, but have reduced their bet of an emergency 50 basis point cut to 25 basis points from 55% a week ago. The rand is on a winning run not seen in 13 years. The 9th consecutive day of gains in the currency, often seen as a bellwether for the outlook of emerging markets, marks its longest streak since January 2011, as well as a 5-week high on a closing basis. The all-share index up 0.7%, financials up 1.25%, industrials up 0.8%. Resources were up earlier but are currently trading down 0.25%, and the rand is trading at 17.93 to the dollar, 19.69 to the euro, and 23 rand 11 to the pound. To give us more perspective on the markets and help us wrap up the week, we are joined by Roy Mutuni, who is from Sanlam Investments. Roy, as mentioned, there's quite a lot of optimism moving through the markets, which, as I mentioned, a big shift from what we saw last week. Can we hold on to this optimism, or do you expect that there's still a little bit of nervousness beneath the surface?
Hi, Anastasia. Thanks for having me. So it's been interesting. This whole week has been really positive, and I think most markets have recovered the gains from last week. It seems to be a consensus that now interest rates are going to come down imminently, probably by September, and the worries around inflation seem to have abated. I think what the markets are taking is that the worry is not now about inflation. It's more about growth, and they're not really concerned about that growth. We look at geopolitics, not really concerned, because you can see the oil price basically remaining stable. So I think the market is basically pricing in a Goldilocks scenario. Basically happy, not overly overjoyous, and not depressed as we were last week.
Let's talk about the soft landing narrative, because the last time you and I spoke, we were debating whether we'd see a soft or a hard landing. How overweighted is this market to the soft landing narrative?
Well, like you mentioned earlier, I think when we had the hiccup last week, you started seeing the fixed income market pricing a 50 basis point cut or even an emergency cut. But none of that happened, and the circumstances around that happening haven't emerged. So there's been no bankruptcies, there's been no real crisis, and none of that has happened. So what you're seeing now is that the market is basically accepting that there is no real need for any of these emergencies or a larger than normal cut, and that growth is slowing at an acceptable pace, that it will get to a point where now you need to stimulate it. Inflation is not a problem, and interest rates are just too high, so they can come down gradually.
So on Monday, we've got results coming out of MTN as well as ABSA. What will you be looking out for in both those particular shares?
So MTN will be quite interesting. They've already, I would say about 60% of the EBITDA is already reported, because we know the numbers from Nigeria, from Ghana, from Uganda, and from Rwanda. So the most interesting thing here is going to be the South African performance, and also what management now begin to guide the market with regards to their Nigeria margins, because they renegotiated their leases there in the past 1 week and haven't given the market much information. From a South Africa perspective, I think the interesting thing will be, will they be able to keep mid-single-digit growth in service revenue like we saw in the first quarter, or will it be as low as Vodacom, which was low single digits, or as high as Telkom, which was high single digits? I think those are the things that stand out. From ABSA's perspective, again, what we've seen Nedbank report already, very solid South Africa-based performance, and then Standard Bank reported very solid South Africa and Africa performance. ABSA has both of these operations. And the thing with ABSA is in the past few reporting seasons, they've tended to come up with small negative surprises. So let's see whether they're able to match the performance of their peers in these respective arenas and hit what market is expecting.
Yesterday's U.S. retail sales gave us a sense in terms of what is actually happening with the U.S. consumer. But I want to talk about the South African consumer. What's your take in terms of what we're seeing there when we look at the upper end of the market versus the lower end?
So the way to distinguish between the two is probably the upper end has savings and has benefited from the high interest rates and from the stock market movements and everything, whereas the lower end is probably quite highly indebted and has struggled in a high interest rate environment. As we move into this potentially lower interest rate environment, you should see a bit of a recovery from the low end. I think a bigger driver of sentiment there will be how people react to the two-pot system and how people react to lower interest rates, and if these interest rates actually come down at the pace that we're expecting. I think we're expecting a relatively shallow cutting cycle, which should be anywhere between 125, 150 basis points over the next 12 to 18 months. If it's a lot more aggressive than that, then I think you should see both spectrums, people from both spectrums, improving their sentiment, maybe going out and purchasing, and maybe even buying durables, which is where I think the economy has really struggled up until now.
Roy, as we wrap up, if you had to sum up the market theme at this particular point, what would the theme be?
The theme would be inflation is yesterday's story. Growth is not a concern. We're looking for lower interest rates. The market does not need interest rates being as high as they are right now. How low can we go?
How low can we go? Let's leave it there. Roy, thank you so much for your time. That is Roy Mutuni, who is from Sanlam Investments.